Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 6th of February. Starting off with the FTSE, which is still in this rather frustrating range, just above the 50-day line there, around 75.90. Top of the range there, around 76.90, looking for an end-of-day close outside that range to take us up towards the top of the channel there at 7,800. The reason we're looking upwards rather than downwards is because we've got the RSI bouncing off neutral 50, which normally is a leading indicator on the upside, and also we've got the rising 50-day line as well. If we break back below the 50-day line, obviously the worst case scenario would be back down to the floor of that rising trend channel, 74.30, but probably the area of the 50 and 200-day moving averages up from 75.50 would stem any losses here. Moving along to the DAX, which has been trying to get through 17,000 for quite some time, but 8th attempt, I think, in the recent past, but with a rising trend channel there from October, top of the channel there, 17,900. We're looking for a break of 17,000 to give us 17,900, perhaps as soon as the end of this month. On the downside, we've got the 50-day line and the floor of the channel there at 16,600, RSI at 57, so still in the zone for a potential move to the upside, or a continuation to the upside. Moving along to the Dow, which pulled back but still remains above the floor of that rising trend channel from October, remains above 38,000. If we break back below 38,000, probably the worst we're looking for now is 37,800, which was the last dip there back in January, and actually that was the resistance for December and early January. On the upside, if we break through, and we've got to break through around 38,800, the target there is 40,000 over the next, well, perhaps as soon as the end of this month, but we're allowing for up to the end of March. Slightly bearish with the RSI there, so bearish divergence with the highs for February rather, but lower RSI trace. So just a bit of a warning there that we are running out of steam. Next up is Bitcoin, and here we can see that we've had that range over recent days, either side of the 50-day moving average, the blue line there, and that's continued. I suppose we're regarding that as a good sign. We bounced off RSI 50 twice in the recent past, so hopefully we're limbering up for a move to the upside, which would be on a break of 43,700 to take us up to the top of that rising trend channel from last year, from back in August, as high as 51,000. By the end of next month. We're allowing, again, a bit more time, but it could be as soon as the end of this month, because obviously when this market moves, it does really move. Moving on to gold, which has been moving in a sort of rather weak way. We've had a bull trap and then what's hopefully a bear trap below the 50-day moving average. That's around current levels. Below the 50-day line, the worst case here is down to 1985, which is the floor of the channel, and the 200-day moving average, but still looking for a proper break above the 20, 50, 60 zone to take us up to 2100 by the end of this month, and then hopefully 2180 by the end of next month. Moving on to the stocks, and mixed bag, starting off with Andrada, which has had a horrible pullback from back in the the start of the summer really, around 8.5 pence. Just a sort of a persistent decline, but first signs of a turnaround here with the hammer candle that we saw yesterday, and then today opening at the low so far at the high of the day. So looking really for the shares to hit that resistance line there from December, just under 5 pence. Best case probably by the end of this month up to 5.5 pence, which would be the old January resistance. Ideally we stay on the right side of 4 pence after that hammer that we had yesterday. And a bit of bullish divergence there, so lower lows for December, January in the price window, but RSI staying at the same level. So just the first signs of that, and obviously if you look back at March last year, we are turning from just above the support there around 3.75 pence on that situation. On to Bushveld rather, and here you can see that the shares have tried to rebound within this broadening triangle. The good news is that we're holding above the old October support there, 1.15. The longer we do that, the more certain we are that we can have a retest of the 50-day line at 2 pence and then maybe up to 3 pence by the end of next month. So still going with that potential rebound scenario on Bushveld. On to a stock which seems to have sorted itself out, at least in terms of the funding, Blencowe, which now it's all we need to see now is whether the sellers come in, because they keep coming in on this situation. After a couple of days, you can see spikes are sold into, so hopefully this will be the exception. It won't happen. Bear trap gap reversal, one of our favourite signals there. And the longer we stay above 3.9 pence, the old March support from last year, the greater the chance of a move up to 6.2 pence as soon as the end of next month. And really, given the news, it should be by the end of this month. But I want to stay on the right side of 4 pence permanently now in that situation. Onto a stock which I clearly charted before, but I've totally forgotten about, which is Beeks. Here we can see that we had our original target there around £1.27. Best case scenario target there, £1.43, and we're just about there now. Probably not going to tempt fate by coming up with a higher target at the moment, but as you can see, 150 basically the 1 year resistance for the share, so probably, at least in the near term, that will be a block on progress, and the upside valid while we hold above resistance on the way down around £1.32. So above 132, more attempts at 150 or so for Beeks. On to CleanTech Lithium, where there are first green shoots of a turnaround, and here you can see that the shares broke out of a falling wedge last month and had a nice hammer candle yesterday, and again, a bit like Andrada, making good moves in terms of giving us signals that the price action has improved here. Initial target here just under 20 pence, and then after that looking to fill the gap up to 25 pence as soon as the end of this month. Just waiting for the RSI to get above neutral 50 versus 44 at the moment. Big news today from Filtronic, and the shares onwards and upwards within that rising trend channel. We've looked at the shares before, and obviously the trend has been absolutely on song for the bulls. Next target really here is up to 35 pence, which is the top of a rising trend channel from way back, actually, back in 2019, if I can get it. You can see that there now. And in the near term, obviously, we've got that narrow channel there from the middle of last year. But looking for 35 pence by the end of next month at the current rate of progress, and looking for that while we remain above the latest gap around 25. So above 25, up to 35 there. Moving along to a stock which had an RNS today and seems to have done the job in terms of the share price. The shares were drifting after the spike and failure that we had at the 200-day line last month. Having another go now, and obviously the initial target here is 46 pence, which was last month's peak. After that, if you're a fan of the shares, you'll be looking for 62 pence by the end of March. And upside valid while we hold above resistance on the way down around the 34 pence level. Been covering Jangada quite a lot, not quite sure why, but it seems to be doing well with that bear trap turnaround that we had back above the 1.3 pence level. We then broke the 50-day line at 1.7, and our target here is the 200-day line at 2.4 pence. Hopefully over the next day or two, that was also November resistance. Above 2.4, looking for the upper parallel line there, the June resistance line there, as high as 3.25 pence. Moving on to a stock which is new to the market and a bit of fun, I suppose, given that we haven't got much charting data to look at, but did have a look at this, and here the shares of Microsalt have been in effectively in a rising trend channel. Want to see the shares remain above the uptrend line there, which is around these current levels. In fact, around 60 pence probably is the level in question. Above 60, we could still get up to £1 maybe by the end of next month, although obviously that is quite an optimistic scenario there. Peak today so far at 75. So about 60 needs to hold basically on this situation. And below 51, the 50-day line would obviously be bearish. Moving along to MyHealthChecked, which there is actually rather more charting data to look at. And here you can see that we had our second bounce off a rising 50-day line, sort of sideways shuffle as I call it. 50-day line there around 11.25 above that. We're looking for 16 pence by the end of this month. Something which would hopefully break the 200-day line at 13.5 and then change the trend in the shares, which has been there for quite some time. On to Power Metal, which seems to be shaping up very nicely after its recent fundraise rather, at a penny. Here we've got this very tight bull flag. Initial target here was 1.3, which we missed by 0.05 of a penny, and then after that looking for up to 1.85 by the end of next month, which is the upper parallel of that broadening triangle from back in March. Never a dull moment at Premier African, and hopefully the shares here starting to regroup. We already had a trend line break around the 0.2 pence level, or there was a suspicion that any price action there below 0.2 is a bear trap, and that proved to be the case. Current position is that we're trying to break that main red resistance line there from June. That is around 0.28. So that's our initial target. Above that, then we're looking at the shares heading back into the 40s. But the key here is to hold above that 50-day line at 0.23. We had an RSI rebound at neutral 50 as well. So that does give us rather higher hopes than we've had of late, that we could get back into the 40s and maybe even hit that 200-day line for the first time since back in August. Next one is Quadrise, which was a great charting situation a while back. Current situation is that we're looking for progress within a rising trend channel, which I'm just about to draw now. And that one is heading hopefully for a decent target. This is a sort of sideways consolidation, and hopefully that will resolve itself to the top of the channel, which I'll hopefully draw a bit better than I have at the moment, as high as 4 pence by the end of next month. So above 2 there, looking for 4 on Quadrise. Next up, a stock which I'd never heard of, or never remembered in terms of, at least in the recent past, SysGroup. Here we can see that the shares have had a bear trap gap reversal, gapping through the 50 and 200-day moving averages at 33 pence, and above that we're looking for 42 pence as soon as the end of this month. I presume that's not a very liquid stock or has a very tight spread, but there we are. On to Superdry, which did us proud last week, just around the time of in fact, just before the time of the bid approach being announced. We had a bit of profit taking off the 200-day moving average, but we did hit our target there around 50 pence. Above 50 pence, we're looking for the shares to hit 70 pence as soon as the end of this month, but obviously we need to get above 50 pence on an end-of-day close. Upside value while we hold above that 50-day line, currently around 32 pence. On to the last two. The first one is URA Holdings, and here a nice look to the chart with a bear trap item reversal, so gapping down in November and gapping up twice now in January and in February. Also got a rising 50-day line, so it's a sideways shuffle above a rising 50-day line. Initial target here 1.9 pence, which is that top of that triangle from November, and then up to 2.2 pence, hopefully as soon as the end of this month. But like to see the shares stay on the right side of the latest gap at 1.5 pence, so hopefully they will. Finishing off with Versarien, which I know a lot of people are willing to recover, but so far we are looking well poised in the sense that we still need to get an end-of-day close back above that January gap there at 0.15. So we're close to that. In fact, we've got very close to it in the last couple of days. The end-of-day close above 0.15 in that gap, and then we could be looking at filling the next gap up, which is at 0.3 pence by the end of next month. Ideally, we stay on the right side of 0.1 in the meantime. That's it for me today. More updates tomorrow.